When you begin a new year, you have a specific amount of cash in your account. During the year, the business has various activities that require payment or receipt of money, like buying and selling inventory. At the end of this year, we will have to account for all of the money we have paid or received. This statement is designed to show how the cash account has changed since the previous year. We do this by recording the difference of this year's accounts versus last year's accounts. That being said, we must remember that our goal is to show the cash of the company. Some of our expenses from our income statement may not be cash, such as depreciation. A statement of cash flows is comprised of three main sections where we display the changes. Those sections are operating, investing, and financing. The operating section is usually the largest section, showing how our day-to-day operations have changed our cash. This is done by showing if we increased or decreased any current assets or liabilities. The investing section will show our change in cash from buying or selling investments. An example of this would be a decrease in cash if we purchased a building. The financing section will show how different finance activities affect our cash, such as a sale or repurchase of stock, issuance of dividends, or repayment of long-term debt. If this were our first year doing a statement of cash flows for our lemonade stand, all previous accounts are at $0. Setting up a statement of cash flows may look something like this. Note: our checking account states that we have $46 in cash today. We will show how we went from having $0 last year in our business to $46 in cash after 1 year. Let's say after our first year of business, we have a net income of $29. First thing is to add our depreciation since it didn't change our cash amount. Our lemonade stand we had on our balance sheet has a useful life of 5 years, and it is valued at $50. Using straight line depreciation, $50 divided by 5 years gives a yearly depreciation of $10. After checking how many lemons, sugar, and paper products we have left, we found we had $12 worth, so our materials increased by $12. Under the statement of cash flows, if we increased a current asset, that means we spent money, which is why we list the amount as a negative. We also still owe Mom for some of the materials. An $8 increase for accounts payable compared to last year's $0. We also owe our friend his wages of $14. So we increased wages payable from 0 last year to 14 this year. Our net cash flows from operating activities is $49. Moving on to the investing portion, which shows changes of long-term assets. We had acquired our equipment for $30, thus our cash decreased $30. We purchased chairs for $20, and also our lemonade stand we bought for $50. Our net cash flows from investing activities is negative $100. For the finance section, we received cash for the lemonade stand as a note. This is our only note payable of $50. We have been paying back Uncle Kevin, and this year we paid $8. All of the common stock was issued to us for our $55 contribution, making our net cash flows from financing activities $97. Adding all of the netted amounts gives us our ending cash and cash equivalents of $46, which, checked against our checking account, is correct.